Bitcoin just pulled back again. But what if this isn't a crash? What if it's the setup for the biggest rotation trade in decades? What traders and institutions are watching could send BTC soaring, and it starts with gold usually. So stay tuned. I want to explain exactly what this rotation is all about. All right. And remember to like, share, subscribe, and comment if you have any questions in the comment section there. And remember that this is not financial advice. This is for educational purposes only. Make sure to do your own research. All right. Let's rock and roll. So here's the setup. Okay. Bitcoin versus gold. Right now, Bitcoin recently dipped, okay, because of a whole bunch of stuff going on in the news, right? New Fed chair was announced as well, being Kevin Warsh, right? Underperforming, Bitcoin recently dipped, underperforming broader risk assets while gold kept on rising up, right? But now gold is also going to also retraced, right? So, and silver. So on the surface, this looks bearish, but what if gold actually is actually clearing the deck for smart money to rotate into Bitcoin? Okay, that's probably what's going on. Right. So the Forbes pullback thesis is this, right? According to Forbes, Bitcoin's pullback is largely driven by derivatives, deleveraging, not fundamental capitulation. Okay. Meaning weak hands were flushed out, right? The amateurs. At the same time, gold has attracted renewed capital, boosting its safe haven narrative. But here's the twist though. Okay. Markets are psychological, not purely fundamental, meaning capital moves where perceptions shift, not just where logic dictates. Okay. So now let's talk about the gold rotation. What is the gold rotation? What does that actually mean? So let's break it down. Okay. You know, when people say gold rotation, right? This is what they mean. When they talk about capital shifting from gold to Bitcoin, right? It means gold's market cap, which is massively larger than Bitcoin's. Right now, it's about 38 trillion, then it pulled back 35 trillion. So in prior bull markets, right? Um, if you look at say 2017 bull Bitcoin cycle, and when you look at 2017, that's when we hit the peak in prior to bull markets, and then 2021. But let's talk about 2017. Right? So BTC market cap peaked near 320 billion. Gold market cap peaked at 8 trillion. Right, that equates to around 4% of gold's size at the peak. In 2021, Bitcoin market cap hit at 1.15 trillion and over, and gold was around 12 trillion plus. So Bitcoin reached roughly 9 to 10% of market cap of gold at our time. What does that mean? So across the two major cycles, gold came to represent a meaningful share of gold's store of value capital, not because gold lost value, but because Bitcoin grew faster, attracting capital that could have otherwise stayed in safe assets. Yeah. So you can frame this as a rotation ratio, even if capital doesn't literally flow directly to gold. The net effect is similar, right? Money allocates away from traditional safe havens towards a high growth store of value. Okay. So why even small percentages of moves matter? Okay. Bitcoin's market cap is much smaller than gold. So small shift in allocation can move Bitcoin's valuation massively. So for example, some analysts say even a 5% rotation from gold into Bitcoin could translate into multi-trillion dollar inflows. And what does that do to Bitcoin price? You already know the rest. All right. So that's the power of market cap asymmetry, right? The macro angles this, right? Bigger forces at play. Okay. Why would this rotation happen? That's the next question. How do I know? Well, why would it happen, right? So Fed pivots, right? And rate cuts could make risk assets more appealing. Gold rally may exhaust near cyclical highs, right? Bitcoin structure now attracts institutional balance sheets allocation, all of which sets the stage for rotation. Okay. And you can see this in prior years as well. It goes from gold and then it gets rotated into the others. So what traders should watch out for, or investors watch out for next, right? Key technical levels in Bitcoin, gold price behavior and sentiment indicators, ETF flows between gold and crypto products, macro signals include inflation, rates, liquidity, etc. So here's a big takeaway. Bitcoin's pullback isn't necessarily bearish. It could be preparing for deep capital inflows. Historically, Bitcoin has captured 4 and 9 to 10% of gold's market cap in prior cycles. Okay. So if you do 10% in this cycle, I think it's a more rotation from the 38 trillion peak right now we just had on gold, right? Or even 35 currently. That's about 10% of that is about 3.5 to $3.8 trillion into Bitcoin, right? Just, you know what I mean? So that's just a rotation that could happen, right? So because this is what is happening in the period bull market. So we can sort of use the past to sort of try to predict the future, but it's not guaranteed, right? So if you want regular micro plus digital asset insights built for long-term thinking, hit the subscribe, like, and turn on notification bell, okay? Drop a comment below. Do you think the the gold Bitcoin rotation has already started? All right, or is about to start, or does not exist, or I'm being delusional? Let me know in the comment section. All right, let's have a dialogue about this. But I really think this is what's going to happen next. And if you put 3.8 trillion dollars into Bitcoin's current market cap of 1 point something, I forgot how much it is, 1.7 or less trillion right now, right? That's about additional X of Bitcoin's market cap, right? So you're looking at already 264, over 260K Bitcoin price already based on just that allocation I just shared, right? And then you have the rest going on with states and governments and individuals, retail, and all that stuff. So we're a long way from the bull market, and then these are just opportunities for me to buy more, right? When price of avocado and eggs drop, what do? You buy, right? When price of Air Jordans drop, what do? You buy. When price of watches drop, what do you do? But the stock market, when price drops, what do people do? They run away, right? That's why Wall Street has a name for them. They call it, no offense, dumb money and smart money. Smart money buys low, sells high. It's that simple. All right. So make sure to like, share, subscribe. Remember, this is for educational purposes only. Make sure to do your own research. All right. This is what I do. And I just want to share that knowledge with you. So stay blessed. Have a wonderful weekend. Have a wonderful day. All right. Bless.